Equities moved higher after a report said Iran reached out indirectly to the U.S. to explore talks. These talks aimed at ending the Middle East conflict, raising optimism that the war may not drag on. The dollar snapped a two-day advance. S&P 500 futures climbed 0.2%. According to the New York Times, operatives tied to Iran's intelligence ministry used informal channels to approach the CIA. This happened a day after joint U.S.-Israeli strikes began. The report noted that officials on both sides doubted Washington or Tehran was prepared to pursue swift de-escalation. Brent crude pulled back from earlier highs to trade below $83 a barrel. European equities extended. Gains to 1.4%. Pressure in global bond markets eased, though the 10-year Treasury yield edged up to basis points. It reached for 0.8%. Bitcoin rallied to $71,000, signaling a modest return in risk-taking. Financial markets faced turbulence since the U.S.-Israeli assault on Iran unsettled the region. This disrupted energy flows and damaged key facilities. Oil remains central to investor focus as traders assess President Trump's proposal to insure and escort vessels. These vessels move through the Strait of Hormuz, where shipping activity has nearly stalled earlier. Asia's main equity gauge suffered its sharpest drop in almost a year. This was led by an unprecedented sell-off in South Korean stocks. While the U.S. is seen as relatively insulated as a major energy producer, analysts note economies like China, South Korea, and Japan rely more on Middle Eastern crude supplies.